welcome to Capital Market Live on Channels Television. I'm Will Ebong, and as always, let's check in on the markets. We begin with Europe, where stocks closed lower due to global uncertainty and as investors digest corporate earnings report. The German DAX closed on Friday lower by 1.12%. The UK's FTSE 100 fell almost 1%, while France's CAC 40 rose by 0.11%. Investor sentiment has been tepid since midweek after minutes from the Federal Reserve's July meeting showed policymakers would not consider pulling back on interest rate hikes until inflation came down significantly. Now to Asia, where stocks were mostly flat on Friday against an also muted Wall Street looking to revive its recent market rally. It was largely negative territory for mainland China markets. The Shanghai Composite fell 0.59% to 3,258.08 points, while the Shenzhen component dipped 1.27% to 12,358.54 points. The Hang Seng Index closed flat. There was positive action from Tencent, up 0.77%, but food delivery giant Meituan was down more than 0.7%. Also, Japan's Nikkei 225 finished flat at 28,930.33 points. Stocks stumbled on Friday as Wall Street's summer rally faltered and rate hike fears resurfaced in the U.S., leading the major averages to end the week on a sour note. The S&P 500 slid 1.29% to close, while the Dow Jones Industrial Average tumbled 292.3 points. The Nasdaq Composite dropped 2.01% to settle at 12,705.22 points. For the week, the S&P edged 1.21% lower, while the Dow slipped 0.16%. The tech-heavy Nasdaq closed out the week down 2.62%. Now, despite the week's moves, many investors and traders are holding out hope for a bounce back. Now, back home at the domestic equities market, bearish sentiment persists for a second consecutive week as the all-share index did by 0.59% week on week to close at 49,370.62 points. Now, joining me to drill down on the names and numbers behind this market's negative performance is Mr. Ambrose Omodion, CRO, that's the Chief Research Officer at Invest Data Consulting Limited. Good to have you, Mr. Ambrose.
Thanks for having me again.
Mr. Ambrose, a lot of things happened this week. Now, we saw inflation numbers going very, very high, 9.64%, beating expectations, in economic expectations. And also, I'm sure that has also had an impact on the market's performance for the week. Am I right?
Yes, I agree with you. But the one thing is that, when it comes to all this macroeconomic data, we want to bring it together at what is happening in the market to know exactly where to go. As we speak now, what we call financial flow of fund, or circular flow of fund, if you want to call it, because when there's high interest rate, fund will be living in that stock market through fixed income where there's more safety. But when it comes to inflation, and the inflation is getting almost 20, and your return in that fixed income market space people are going at is below 15%. Naturally, you are having a red return, negative return as we speak. And there's no way for you to hedge in such environment because inflation is already ahead of your return in the fixed income market. What you do as an investor, look at which sector or which investment window can you hedge against inflation? Because inflation tells you that, yes, prices of goods and services are up. Then how long it will go, you don't know. But you're doing that, you are in the market to what? To preserve your fund and at the same time to grow it. If that is your goal in the market, you look at, okay, the equity market where funds are living. Okay, which companies in that sector has good number in terms of highest dividend yield that you can hedge that if, at the end of the day, capital appreciation plus that you are ahead of inflation, around the 30% at the end of the day. Because to speak now, most of this 15% in the fixed income market is a year space for you to get such a return. But yeah, for me, equity market, in 6 months, you can make even more than 30%. Because if you're having a stock, as we speak now, we're already in September, in August, we have less than those 4 months to enter the month of the next year. If that happens, and we are entering now, and we are seeing like stock like the Zenith Bank, GTB, stock like UCAP, having almost 14% dividend yield already in dividend yield. That means this company, their payout will not go below that yield as to speak, because their earnings are improving.
Okay, so we want to look at the names, that's the stocks that actually pulled back the market this week, because I'm sure investors probably want to know what stocks are responsible for that. Now, we saw that Okomu and Presco were among the stocks that were responsible for the pullback, and also the consumer goods counter also saw that effect. That impact was felt in the consumer goods sector. It was down about 1% 1.03% for the week. Now, are investors losing hope in the consumer goods?
No, actually, if you look at the, as you said, you want to read the number that pull, the company that pull the stock, the index down. I will tell you, it's more of those that were adjusted for dividend. If you look at the week under review, we have MTN adjusted for 5 naira 60 kobo dividend. You see Seplat about 12 naira adjusted for dividend. You see the life of flour mill. No, then when stock like that, Okomu or Presco pull back again, that's why you are seeing the market in negative. If not, if you look at what happened the previous week, we have about 2.09 down. For this one, if we just 0.59. If not that these stocks were in red, the market would have found a kind of stability at this time. But because of this markdown, that the major thing, when you mark down stock like Steplat, Steplat has a weight in the market. It's a stock that pulled the market from as low as 600 and something naira to almost 1,500. Comment down a little, that will bring the market down. And MTN has also weight in the market. MTN removing 5 naira 60 from the price. Also, when stock like also Okomu, that's why the market is down. For me, I believe that because between now and next week, we'll see more markdown in those prices of good stock that have declared dividend. That will naturally pull the market down. Well, by next week, as we speak now, the life of this Okomu will be adjusted for 7 naira dividend. When that happens, it will also pull back. The life of Northern Nigeria flour will be adjusted by next week. At the same time, we're seeing QTs being adjusted by next week again. We're also seeing custodian allied investment adjusted by. For me, this was that is why investors do not just panic because the market is going down. Have a goal, trade your goal. If you're a long-term investor, position in those stocks that they have future. The dividend yield is high. Then if you're a trader, the market might not be so interesting for you because traders want to trade volatility. And the volatility we're seeing in the market is there was too slim because there's no much movement up and down. But for those that are investors, cool your mind, the market is in order because as we speak, it's just because of inflation and rate hike. Before now, markets are rallying on what? On low interest rate. Don't forget that 2021 until date, we are still market an uptrend because we are experiencing low interest rate in this period. But because of hike in these two MPC meetings that changed the face, that is why markets move in circle. And when it's moving in circle, as a trader or investor, you don't use the same strategy you used previously. You have to adopt a new strategy. Like what I told them in one of the class today, for you to trade this kind of market, you must change your strategy. Try a new strategy to trade the market. If you are using the same strategy you used when market was going because of low interest rate, you can't gain anything from now. What you do, adopt a new trade. Like what I told this one that what you will do, okay, change your strategy. If you're a trader before, you are trading almost 5 stocks before. No, make sure that you have cash in your portfolio. Wait for opportunity to see the stock that pull back. Stock like, let's example now, Access Bank. If you trade Access Bank coming down from as low as as high as 9 naira to almost 820, 830. If you're a trader, nobody will go and buy that kind of stock. You know that when results hit the market, because we're expecting to see the result of assets and going to come with dividend, you buy at this price. When it comes, if we move to 10 naira again, you have made more than 20%. In no less than a month or 2 months, you have to smile home. But if you are waiting until all the stock are going before you buy, that's why you need to change yourself. Also, you not track the strategy you are using because it's a new strategy. Have a measure, have a track to see what we are doing. Is he using result? Then at the same time, again, if you want to stay away from the market, you must not be in the market always. Most Nigerians want to trade our market every day. No. It's a time for you to stay back and watch the trend in the market because you have cash to look for opportunity. You are waiting to see the opportunity. That's why you are not trading. Once they come, you jump in.
Okay, so you talk about MTN and Seplat being marked down for dividend payments and payout. And if investors are actually positioning themselves to actually benefit from the dividend, I should expect volume or turnover to be higher this week. But why is total turnover really low when compared to last week? Can you talk about, let's take a look at the activity chart
of the market.
And see what was really going on there in the market this week.
The market is already making lower low. Since the month of June, market is making, that's what we call corrective wave in technical analysis. Market is making lower lows. In that way, you are seeing also lower volume. That people are still sitting on the Fed to see what is happening in the market. But for what you said, for those that already in stock like MTN, now you know that the markdown is already, you are not selling, you are not buying, want to take your dividend. And those that will buy MTN will wait, I didn't qualify for the dividend. Now they've marked down, I cannot come back forward. And, we have different strategies to trade the market. If at the time they were waiting for dividend, I don't have fund. Now I see that MTN that was selling for almost 200 naira is now below 200, around 196. It's a problem for me to go in. That's why when, as a trader, you don't must be in the market always.
But I'm not seeing the numbers. If this is an opportunity for investors to go in, why am I not seeing the volume and the value reflecting in that for this week's performance?
I like that question. When it comes to liquidity, I said interest rate is very, very key. Now that interest rate has been jacked up, liquidity in the market is low. That's why I'm not seeing that volume. If there is liquidity in the market, you see volume in the market. But the people that are bringing the hot money are the PFAs, institutional investor, and they don't invest like the retail investor like you and I. They need to do their due diligence on the numbers that are hit the market before they start coming in. And also, they see that, oh, the fixed income market is more deep for them. They can put trillions. To speak now, the last report is that about 14 trillion assets worth of PFAs. And less than 10% is in the equity market. But for me, they let them do the due diligence and know exactly when to come back to the market. Don't forget that we're already in the month of August, which is almost close to end of third quarter. And there's a kind of a mantra in equity investment or anywhere in the world that sell in May and buy in October. And if that is a matter that will work, now by October, you'll be seeing the Q3 number for the company that had December as year end. Then when those numbers come to the market, I will tell you the PFA seeing the opportunity that at that time, it will be less than 6 months or 4 months for them to get in the full year result of this company. They start taking position again. Where they have more stock already, they cannot increase their stake. That we call accumulation. That will move the market. Or that is where you start seeing the volume you're expecting. They are not in the market. That's why the volume is low because
the PFAs you're talking about are the pension fund administrators.
Yes,
so because they've been investing heavily in the equities market, especially fixed income and equities market.
But because of change of interest rate now, the fixed income market now become more attractive because when you hack your rate, automatically those instruments yield will be up and they are looking that way. And that's where they can put more money because it's more robust and it's deep.
So what would say, how much lower do we expect the year-to-date return to go? Right now, it's settled at about 15.6%. Now we have month-to-date loss of about 2%. How much lower do you think the year-to-date loss is going to be?
For me, the earnings that hit the market so far from post-COVID-19 did not have been impressive, and that have kept the market up. Why the market is still dragging feet? Because I said earlier, there's no liquidity. Once you start seeing liquidity, they will see a change. And don't forget that being pre-election year, many people are still kind of jittery, so afraid of what will happen. But I will tell you that we have done this pre-election year for several years now, almost like 24 years, but doing pre-election year. If that has come to say that Nigeria will not go on fire, for that, anybody that is afraid of election, yes, it might be in your, for me, personally, I will not be afraid of election because I'm Nigeria, I know how we do our own. That means don't because of election stay outside the market, but markets are pulling back to present opportunity. Most stocks are cheap on that value. We come back to the market, and once they talk about that volume you are talking about, but for now, people are sitting on it, like kind of indecision among investors or traders to see what will happen, especially now that there's no kind of push for the last earnings season, then all eyes will be on the third quarter. And don't forget that anywhere in the world, third quarter earnings season is very, very important because it usually forecasts what will happen at the end of the year. And as we speak, most of the companies on the exchange have surpassed their 2021 performance in their Q2 numbers. That will give you an insight that anybody that's investing now, you are not taking this, but you are buying cheap stocks, but you have to wait. That is the only thing there.
Talking about forecast and looking into the crystal ball, what would be your outlook for next week?
Actually, I said earlier that we expect about 4 companies to mark down again in terms of dividend. When Okomu, you take away 7 naira, they declare as interim dividend from Okomu. Okomu closed at around 190 something. If you lose 7 naira from it, you bring the price down. That will also put weight on the market. You do the same thing for custodian investment. That will also put weight for cuties and the Northern Nigeria flour mill. But I believe that because of the low price again, people are also take advantage of the price because we are believing that towards the end of this month, those interim dividend paying banking stocks should be in the market with their result. And when they start coming again, it might add another kind of momentum to the market. But it depends what they are paying now. But if you look at those banks that are paying trade dividends, stock like Zenith Bank, GT Code, Access Bank, Stanbic, and UBA. These are the 5 banks that we know that. But if you look at also their dividend yield for this bank, it's above 10%. That's why I said, for design investors that are looking for where to make money, especially dividend, these are stocks that you should, because banking sector for over more than 2 decades have been consistent in dividend payout. For that, it's just because these days now, the bank is not the toast of investor again. Before now, every Nigerian investor wants to play part in banking stock. But since telecoms and agricultural started and industrial came up again with performance, people are now shifting away from banking stock. Also, most of the
diversifying their portfolios.
Exactly.
Now.
That's why you see more activity are not in banking. But I believe that sector, because they are most consistent dividend payment, if you are a retiree, you're a long-term investor, that's where you put your money. But for like that, I'm a trader. I might buy Access Bank today. In the next 2 months, I'm off at Access. But for the guy that want to wait for dividend, Access is a good money to hold. I said in the market, we have different investment objectives. Let us not just because market is down, we'll be shaking. No.
So now we'll take a quick break, and when we return, a look at investment opportunities in the health sector. This is Capital Market. Stay with us. Welcome back. This week, the Central Bank of Nigeria ended the interest rate reduction on all intervention facilities. The CBN had cut interest rates from 9% to 5% as part of measures to mitigate the negative impact of COVID-19 on the country's economy. According to a circular signed by the Director of Financial Policy and Regulation Department, Chibuzo Efobi, all intervention facilities granted effective July the 20th shall be at 9% per annum. Also, all existing intervention facilities granted prior to July the 20th shall be at 9% per annum with effect from September the 1st. Mr. Obodion is still here with me to answer and talk about this. Mr. Obodion, you've seen what the CBN has done now. What will be the impact of this reduction or this reversal to the companies or the stocks, the companies that are affected in this?
For me, it's a welcome development for now because, yes, we are seeing that inflation is doing a lot of harm to the economy, but also if you are hiking your interest rate, also kind of deflating your growth. But knowing that these critical sectors are the ones supporting the GDP and all those stuff, it's good that they reverse it so that those sectors can really breathe out as we speak now. I believe that other sectors like healthcare, airline, agriculture, now with this adjustment down, you can see that their cost of finance will also drop. If you look at most of the data that came for second quarter or half year, the finance cost has been in the upright. But with this little adjustment now, it's all going to reflect either for their last quarter, which is December, or this. But they said as from September, that means for this third quarter, we might not see much of this adjustment in their result. But from their last quarter, which is coming in December, we might see that. But for me, it's a welcome development for the economy because those sectors now, they will be relieved because if they are before they are paying 9%, now paying 5%, you can see 4% is very, depending on the amount you have taken, it's a huge thing to kind of, impact on their performance. But it might not reflect on the economy because this is on intervention. But when there's adjustment in NPR, that's where we can smile. But this one is mainly for those operating that they find. It also have a way of boosting their performance in terms of earnings and also employing more people. But it won't do more on the economy because the interest rate is already at almost 14% NPR. That means the minimum you can get any bank facility in Nigeria should be around 20% and above. Because if we are seeing the minimum is 14%. When it was 11.5, we are seeing around 18%, 70% interest rate. But now at 14, around 20%. And which is also only healthy because if you are paying 20% to service your loan and you want to buy this at this price from 300 to almost 800, yes, there's a little kind of slowdown in the diesel price, but still it's still high. You compare the price where it's coming from and what it will cost. Now, I know that in Nigeria we don't have energy, so that like you are almost all the factories are running on them. On diesel for that. It's good for them so that this will help them also to cushion their cost effect a little.
Now, we don't know what's going to happen in the next MPC if there will be another rate hike by 100 basis points. We don't see. We'll wait and see that.
For me, I do not expect 100 basis hike. I expect mass 50 basis points or 25. Let's watch the effect of almost 250 basis points we have done the last two meetings. For me, I expect them to do 25, mass with 50. But let's leave it unchanged to see whether the one we have done, how that impacted the economy. For me, that's what the company should do. But we can't decide for them. They know why they will change it all. But I believe what will see the economy, let's leave that at the 14 and watch and see what will happen.
So interesting conversations we're having now. But a lot is still happening in the health sector because President Buhari recently approved the council to eliminate malaria by 2030. That's still good news for the health sector, isn't it? It's in terms of investment opportunities.
Yeah, for me, yes. Although, and support like Dangote being the chairman of that council, and they know that we have local manufacturing. They won't be importing any drugs to take care of malaria in Nigeria. Or to that means more business for the healthcare sector. It's a positive news for them, for me. Yeah.
So, what investment opportunities do you see here now? Are you seeing more local manufacturing, that's the pharmaceuticals, mushrooming coming up? Do you see that happening, and do you see people investing in them, or do you think they're going to struggle?
No, actually before now, because of the COVID-19, government are giving attention to healthcare, and that is why this reduction in interest rate is also a plus for them, because that sector before the COVID-19 is sleeping. Like moribund sector, but during COVID-19, nobody was turning out of Nigeria for treatment. They are forced to look inward and make sure that our health sector is working. And you also can't be working without your pharmaceutical sector not producing enough for you to give to your health sector. For that, I believe that this is also an addition positive sentiment for that. Don't forget that if you look at the numbers of these sectors from pre-COVID-19, we have seen improvement. And investors' interest has also improved, so that they are seeing opportunity in that industry. I believe that with this, all this happening now, that will create more business for the sector. That means for you as a long-term investor, also don't forget that whether you are aging, they are giving birth, you need a medical, one way or the other. I mean, that sector for me is good for what? For long-term investor. Because now that we're looking what to make sure that our sector is not that. That means if you are thinking where to pay for long term, those that are doing well, the leaders in that sector should be attracting investors now.
So now let's dissect some of the Q2 numbers from the health sector. We're seeing May and Baker, they released their Q2 financial results, and they had a turnover of 6.77 billion in the second quarter of this year. So what we talk about is how would you rate this performance when compared to last year, and seeing, is there anything in the offing for investors in terms of dividend? Has their dividend yield grown, or is it still static?
There is, because when a company top line is growing, it shows that the company is eating to another market or is adding more product to it. I know that means you're expanding your share of the market, which is good. But when you, at the end of the day, you're having a decline in your turnover, that means you are not making progress. For seeing the kind of growth in that turnover line is very good. But what matters is that at the end of the day, because every investor wants to see your profit after tax, that is what determines what you're going to pay me. Know that because you know between the top line and the bottom line, costs are involved. You want to pay tax to government and all that. It is when you are paid tax, take care of your and now see, yes, this your turnover has given me something possible. I can't use your turnover to judge you until I look at the whole result and see that, yes, at the end of the day, your bottom line is also robust as your top line. That is what I can say the company is doing.
Oh, see that their profit after tax is less than what they had in 2021. That's about 27.54% down. So what would you say attribute this to?
You know, I said earlier that cost is part of it. And also don't forget that, you know, this sector too, because of up and down in the economy, you know, it's part of what is also affecting them. Cost of diesel, you know, they're into manufacturing. That's why when I see some of them in that sector that have done well, I give them credit, because that territory now is not easy because of my cost of operation and all those stuff. So in a decline for this second half should not, you know, scare people away from the company. But look at the price has become more cheap, from almost 5 naira 20 kobo to around 3 naira 8 kobo as at close of business on Friday. I see that stock look attractive, but there are other companies in that sector that their result also is promising that one can look at the end of the day.
Now we're looking at Name It. Name It is the results for Q2 was not very impressive, and their year ended was supposed to be September. We're still expecting their Q3 results. Can you talk about that? Is it something we want to talk about now? Name It. What are they doing? They just issued the rights issue. It's still ongoing. So what's happening with Name It?
Actually, you know, taking the step of rights issue is good, because going to the bank to borrow is high. That's why I need to approach your existing shareholder to bring money so that we can expand our business. It's a good move for me. It's a welcome development. But the performance also to attract investors is what we also be considering. As we speak now, it's the same September year end. We have not seen their Q3 as we speak now. And on their Q2 that's already in the market, we're seeing a decline already in the a decline in their result. For me, that is not a good sign. Also, don't forget that when a company is doing additional share, that's going to dilute your earnings at the end of the day. If they increase their share in issue and if they dilute their earnings, for me, investors have to be very careful. Because as we speak now, their right issue around 1 naira 55 kobo and the market price around 1 naira 53 kobo. There's no much there. For me, those that want to buy for long term, fine, but you have to be very careful in such investment, because once they dilute their earnings, at the end of the day, if the what you call the inflow from the primary market activities, you have to wait until start yielding a result, because not immediately they'll collect the money. That means investors that want to invest in that should be thinking long, not for short term for now.
Now, talking about all these investments, we need money. We need savings to be able to say we want to invest. Yeah, CBN has just, reversed the interest rates back to 30% of the MPR, which is 30% of 14%.
Yeah,
But right now, is that still enough for investors to be able to say, yes, I have enough money in my bank to go and buy shares, equities in this trying economic times that we are in?
No, naturally, without savings, there's no investment. CBN want to encourage savings. That's why they are doing what they are doing, which is good, because it's when you save that you can invest. For me, it's a good development. But like you just said, it's not enough as we speak now, because there's no liquidity in the market. Because consider the interest rate and what you are earning. Most of the people for their purchasing power is low. They've not increased their salary, but price of goods has gone up more than 100%, and their salary remain. All these are what we bought. The good thing is that the healthcare sector, I see a lot of potential there. See the life of fixing, earnings alone, cover all the activities of others in that industry. That means for an investor that want to really play in the healthcare sector, fixing our demonstrated strength as a leader in earnings, a leader in price, I think one should be looking at the way of fixing for now. And don't forget that this is a company that also give you bonus of 145, and their earnings has doubled. For me, that means it can take out that additional share they've added, and they pay you the dividend of 50 kobo with their earnings per share of about 1 naira 30 kobo at the end of half year. At the end of full year, forecast around the 280. For me, for those that I really want to take care of position in that sector, fixing is looking good. We're seeing the GSK looking good. For me, investors should consider, it depends also on your investment objective. It's very, very key. We're not in the market for the same reason. Some people are in the market reason to make 2 days trading, 3 days and go out. Some are there to hold for 5 years, for 1 year, for 6 months. That's why you trade your plan. Anytime you're in the market, don't just because Mr. A is buying this one. You know why you should buy. You know the source of your fund. You know what you want to achieve. That's why before you enter the market, set a goal for yourself.
Always have an objective in the market. That's definitely a thing investors have to pay attention to. Mr. Ambrose Omodion, thank you so much for joining us in the program and sharing your thoughts with us.
Thanks for having me.
And that's it on Capital Market. Do join us same time next week. I'm Will Ibang. Bye for now.